afternoon, everybody. Christian here. Today I have something to share with you. If you guys know, if you've been watching the videos for the past few weeks, you know that I've been feeling led to share something with you guys regarding trading. It's something that I've been doing for a while. I know this is an area the Lord has told me before that He has given to the church, the stock market. And so for me to share this with you feels right, and for me to not share it with you clearly feels wrong. So I wanted to make sure that I definitely shared this with you. It took me a little while to get it to put together. Had to get the software. You guys helped me with that. I appreciate that. We obviously exceeded our goal. That was awesome. And then I wanted to say thank you to all of you who did support this ministry over that time. It allowed me to get the funds together to get the software I needed and so forth and so on. So thank you for that, and I want to now share this with you. However, before I do that, I want to talk a little bit about it. Obviously, I've made this video in the attempt to make it understandable to like people who are just starting out, know very little, if anything, about the market. So you might say it's oversimplified. It's completely effectual. However, the more you know, obviously the better you would be as a trader, right? So if you watch this for yourself for the first time and you're like, wow, trading looks awesome, I want to do that, know that just watching some video doesn't make you a trader. You need to develop yourself, right? So I'm constantly studying, learning, growing, and you should be doing the exact same thing. Don't let your lack of knowledge keep you out of it, but don't run, foolhardy into it and not take the time to educate yourself either. I personally, living in the US, I use TD Ameritrade as my online discount broker. I recommend them for some basic reasons. People often ask me, which broker do you use? I use that one. They ask me how much you need to start. Well, with TD Ameritrade, you can actually create your account online without actually funding it immediately. So you could do that immediately and not have to fund it whatsoever. Why would you do that? When you sign up with TD Ameritrade and you even if you don't fund the account, you can then download a platform, a trading platform from TD Ameritrade that's called Thinkorswim. Great platform. One of the reasons that I recommend people do this, even if you don't plan on trading, is that with Thinkorswim, there's a feature when you first start to launch it that you can switch it over to a paper trading account. So it just lets you practice. You're not going to lose any real money, and you're not going to make any real money either, but you'll get the feel of what it's like to trade in live environment and have that benefit of kind of going through all the big errors, early on, just in a paper trading account. It's a smart way of doing it. Not the way I did it, and I lost a lot of money as starting out because I didn't take advantage of that kind of situation. So I would recommend that to anybody. Also, as I think I stated in the video, this trading model that I'm going to share with you is something you could use trading anything. That if you're using technical analysis, you're analyzing price, you could use this model to trade it. I don't see any reason why you couldn't do it on multiple time frames, nor do I see any reason why you couldn't do it in Forex or something like that. I personally trade stocks in the US, of course, and I'm using options to trade them. So technically I'm trading options. I do that for multiple reasons, but just for myself, I find that the most effective way. I can automatically guarantee the maximum I'm about to lose if I'm wrong. Using options, I love that. And I have the benefit of leverage. So it leverages my upside and minimizes my downside. I love that. Forex will definitely give you the leverage, but it's leveraged on both ways, right? So it's just something that I find a little bit of weakness in that. One benefit to Forex, though, is that it seems to trend better than individual stocks. So Forex will just ride that trend for a long way, and so if you get into the bottom of that, you can really benefit from that. So there's just lots of different things that you got to kind of weigh out for yourself when you go into trading and say, do I want to trade stocks? Do I want to trade options? Do I want to trade Forex? Whatever. What works best for you? Of course, I'm not a licensed anything. I'm just giving you my own personal opinion and sharing with you something that I find that works for me. I recommend you, go out and talk to a financial advisor, and so forth and so on. Insert disclaimer here, and enjoy. Good afternoon, everybody. Christian here. Today I'm going to be showing you how I like to trade, at least one of the main methods that I like to use. I've got on this chart here, I'm looking at Apple. This is a 2-year daily chart. Each one of these candlesticks represents 1 day of price activity. Green days are up days, or red days are down days, of course. But on this chart, I've also taken a section of this time period and highlighted it. And then I've overlaid 3 different moving averages. This is the 10 period, the 15 period, and the 20 period moving average. It's a very, very simple trading strategy that I want to share with you today. Basically, what I'm looking for is the price activity on one side of this set of moving averages or the other. And in this particular case, we have price on the top of the moving averages, telling us that we're in a bullish uptrend. And then what I'm looking for here is situations where price moves or fades back into the moving averages and gets itself in a very, I would consider it a tight pattern or tight trading range where I can anticipate price is going to expand. So it is contracted, and we're looking for it to simply go back to its regular activity of following the pattern of price activity, which is to expand and contract, expand and contract. So here we have it contracting back into the moving averages, and I can get a hold of it here, and then I expect price to follow the overall trend. And the overall trend, like I said, is up as the price is above the moving averages. Ergo, price should expand to the upside, and boom, here we got this move to the upside. And we get a contraction again. Notice price pulls back. I would have liked to see more here. Again, we get a little pullback, and then it starts to move sideways, pulling itself into these moving averages, at which point you can do the exact same thing you did before. Expect price to expand and contract. And there you go. Get a hold of the situation, expecting the overall trend to continue. And before too long, boom, you get a nice move to the upside again. Nice pullback, and then the same thing happens. We get that contraction, and that gives us our entry opportunity as we pull back into the moving averages. And you can look a lot of times at your candlestick patterns, the formations of the candlestick. If you're starting to see a hammer candlestick formation or a doji, these are indicative of that contraction we're talking about. The candlestick itself will get really small, and that will make it really easy to spot the contraction point that you're looking for. Now, you can either get involved when you see it contract or wait for it to start to drift in the other direction, kind of giving you a heads up, this is the direction we're going to be going, or at least that's what it appears to be, and then get involved and expect that expansion to follow, and then again, a nice little contraction. In this particular situation right here, people always complain because they say, well, yeah, technical analysis works in hindsight, but actually this particular trade right here, I'm already involved in, and I got in on this day, and there you go. I got in on that day, if I could draw it right. Anyway, you know what I mean. I got it on that day, and I've seen in the past 3 days a nice move to the upside, and in this particular situation, I'm up over 70%. Now, again, I want to point out this is Apple stock, right? So, what's the deal? Why am I up over 70% in Apple stock? That is just from this little 200 point here to the 203. As you might have guessed, I'm trading the options, not the stock. So I don't need as much capital to make the trade, and I can basically trade it like a penny stock because the short-term options will be priced in that way. And would allow me to take advantage of that. So it's this little trading strategy that I've been using for a while, and I found it pretty effective. There's times when you will lose everything you put into it. If you're anticipating price to continue that trend and you get a surprise and price just breaks down, you're probably going to lose whatever you had in that option. So if you had $100 in the option, that's just gone. But when you're making big moves like this right here, in a short period of time, you could make 10 times your money on that. It's 1,000% return. So to be wrong on occasion and see 100% loss on something, as long as you're using the same size positions again and again, it's going to work out mathematically in your favor. It's a good trading method. The only caveat here is that you have to be trading situations that are trending up or trending down. It works whether you're a bull or a bear, as long as you've got the right stock that you're trading. You can't be anticipating, this is going to be the top and I'm going to short here and it's going to break down and go much lower. You can't do that. You have to work with the trend. And right now, this trend is up. And as long as price remains on this side of these moving averages, there's no reason to even pretend to short it. Again, on the other side, if we had price flipped and it was down here below the moving averages, there would be no reason for me to attempt to go long and expect the price to move higher, at least not using this model that I'm showing you right here. Another situation you can trade with this particular model is whenever you see price activity moving above and below very freely, above and below the moving averages, it tells you that price is in fact moving sideways. That's why it's not showing any support at these moving averages. So whenever you have that situation, if you get a nice pullback and you wanting to either trade back to the other side, what you can do is watch for price to get itself in a contracted point like you have here, or like you have here. Let me see if it'll do it. Or maybe here. And what you can do there is just anticipate the actual pattern to continue. You have this little channel. You can expect price to continue to expand after it's come down to the low side and then go back to the other side and so forth and so on. And there's also times when you might find yourself where you have a nice move to the upside or a nice move to the downside and then some consolidation that happens during that time period. If you find yourself in a situation where you don't know what direction it's going to go and you're not comfortable just going with the prevailing trend being dictated by the moving averages, what you can do with those options is get a call and a put and just simply be on either side of it. That'll work if you're expecting an explosive move that will basically make up the fact that one of your positions, in this case, if you see it go long and it takes off and moves to the upside, if it's a big enough move that it will support the loss of the other contract that was not going to be effective for you in that trade, then it would make sense to be on either side of it, and that would just kind of cover both bets, so to speak. Now, this trading model will work on any time frame, on any asset as well. So if you wanted to use this trading method for Forex, you could, ETFs, etc., etc. It doesn't matter. Also, if you wanted to day trade with it, you could as well. The only detail is options themselves are not going to, of course, work if you're trying to trade it with Forex, or if you're trying to do day trading with it. Options won't be something you can use to benefit that much. It's just difficult to trade options intraday, so it's something that I wouldn't try to do myself. You could just buy the stock. But the main thing is to let you know that this is a simple model where you're doing the opposite of most people see extremes and they expect the extreme to end and a reversion to the mean. You are simply looking at the mean price activity, pulling back into that average, and then you are looking for it to not continue that, to in fact expand, like I said, contract, expand, and expand.